Welcome back to the channel Trading Simplified. I'm a trading enthusiast and love to simplify trading. To get started, just a reminder that I'm not a financial advisor and this video is for entertainment purposes.
Talk about DraftKings. DraftKings sold off today because Penn, who is another competitor of them for gambling and all that, missed earnings, and they really sold off today. I mean, look at that. They went from $73 all the way down to $59. We will get into them if we think they're a buy. But DKNG, I'm telling you, this is the stock that you want to have in your portfolio, but we just have to be patient. And it sold off based off of Penn selling off. They have earnings tomorrow, and DKNG overall doesn't do well in earnings except for their revenue. And let me just give you a good example. They're going to miss earnings, or they're going to still have revenue tomorrow. I guarantee you they're going to beat earnings tomorrow in terms of revenue, but they are not going to do well in the terms of earnings per share. And why is that? It's because they're a growing company. They're still doing their thing. They're growing. So for a company to grow, it's really more important for them to beat revenue. If they can beat revenue, that's going to cause the stock to go up. What I'm hoping for is I want a position in DKNG, but I want to go long on them. I think this is offering a very good swing trade, and I'm going to show you why. And I just wanted to show you their earnings over the last quarters here from 2020 and 2021. They've been beating by 38, 32, 20%, so that's good. That shows signs of growth for the company. I want to bring up one more article before I go into the chart, or the graph, I should say, into looking at it. But they're just talking about why they dropped. And let's see why they dropped. Let's see why their analyst is. I just gave you the reason, and I believe that truly is it. They think that they're not going to do well in their earnings because Penn didn't do well, so they're worried about the entire industry. So he's saying he's not bearish on the industry. He wasn't overly optimistic that they might swing profitability and that it's still a few years away. So, I mean, one day for a stock to sell off based on that, I mean, come on. So they are doing profitability. They are making money. Their revenue shows it. The numbers speak for itself. But the stock prices that some of these companies are putting them at is $41 a share. And that's good for us. We want this stock to get lower, at least in my opinion. I don't have shares of DKNG. I had them at like 37 in the past and sold them when they were up. But now I'm looking for a re-entry on them. But I'm looking at the 6-month chart. And look where they are. I mean, they are literally a roller coaster, which is fantastic. We can get good swings trading this company as long as we are patient and we buy low and sell high. So we are looking at it, the 6-month RSI at 35, which is awesome. But you know what we really want? We want the RSI under 30. So we're going to be patient, and we're going to look for an entry. But support, looking at the 6-month chart, the low here is 42, so might get a bounce there, but the low is 39. And that, I'm looking over here. This is the L is for low, and I'm looking over here, and I'm lining it up at 39.93. My entry to start building a position on DKNG is going to be $40. And I am hoping that earnings doesn't go well, because I want to build a position, because I believe in time DraftKings is going to be a good stock to own. I mean, they're part of the UFC. They're all over with betting. Everything's going online. I am always bullish on DKNG. I just don't want to buy them in the 60s or the 50s. I believe if I get a position in the 40s or lower and I hold this long term, I think I'm gonna be looking pretty good. Or even just a swing trade, I'll back up to $50 to $60. So you just have to be patient with this company and just realize that they're still growing. But if you can get them under $40, anything under that is awesome, and just start building a position. This is definitely a company that has a lot of room to grow. And they originally started at $10 and then went all the way up to $70. And if they come down a little bit more, this is great. I want to own them. $35 would be amazing. That'd be the next. If it breaks $40, it's going to $35, $36. But this is what we're looking at. This is what we want. So this is a company that I believe is a good swing trade, and I like them long term. I'm going to buy them in the retirement account, and I'm going to hold them for a while. Unless they blast right back up, I'll take the gains and try to rebuy the dip. But I want to bring up this video because I think it's important. I think they have a good chance of making good profit for us. So that's why I just want to bring up my next play and what I'm looking for. And it might take tomorrow after earnings, or it might take a few days after that, depending on how they do. But if they don't go down and they don't sell off to $40, I'm not buying them. So when you're a dip trader, you got to be patient. You got to wait for the dips. You don't want to get over aggressive and just buy just because you want to own them. Wait for your targets, and when your targets hit, you have a plan and you have your stop loss, etc., all that. and you feel more confident in your decision instead of just buying them here and praying they go up. So we'll see what happens tomorrow during earnings, but that's my plan. If they sell off, I'm going to start adding pieces, but it has to be at least $40 or lower for me to take a position.